The other thing with China that they're doing that's going to impact the de-dollarization and silver markets is they've changed the licensing agreements on like 60% of the supply of silver worldwide, which they control. What is going on there? And we're seeing huge silver increases. It has to be tied to some of those actions.
Yeah, well, let's go back to the end of 23. The European Union said silver is a critical mineral. That's what the EU did, largely missed. Everyone is focusing on what the Chinese said here in January, but let's continue the timeline. In November of this year, before they made that announcement, they said that they are now going to prioritize silver and exporting of it for domestic needs. And then the United States says, well, but it is now a critical mineral here in the U.S., which is huge, putting a policy floor, a national security floor, if you will, underneath the price of silver. And then China comes out and says, well, we are going to restrict silver exports. And to your point, in terms of doré refining, doré being bars that are crudely refined by miners who then send them somewhere to be fully refined. Well, a lot of that silver all around the world in doré form found its way to China, who, to your point, does refine between 60 and 70% of all the world's doré, which then they refine into pure silver. They said, yeah, we're going to restrict to only state-sponsored refineries. There were hundreds of smaller and mid-sized refiners that would send their metal out into the Western market that now do not meet the qualifications. And if they are state-sponsored and have to get a permit through Beijing, knowing that in November they said exports will be really rethought and prioritized to domestic needs, and we're going to restrict them, and you must get permitted first, along with silver being classified strategic in the European Union and the United States, you can see that this is happening. Now, I've said on your show for quite some time that I have friends in the mining industry, Sean Kuhn and for Dolly Varden in particular, and Keith Neumeyer for First Majestic, who have said that that Chinese, who are the number 2 largest producer in the world, are flying around Latin America for years buying pre-refined silver from the mines themselves. In other words, doré and concentrate, which is a byproduct of the mining process, shipping it back to China and refining it themselves so that the market has no idea how much they are buying and it doesn't have an effect on the price. But they've been doing that for years. Now, this is the number 2 producer in the world that finds it necessary to fly halfway across the world and buy unrefined silver in pre-refined stages, sending it back and doing it themselves. You can see that this is something that they understand. And then taking a lesson from the Chinese was Samsung, who a few weeks ago flew to Mexico, struck a deal with a closed mine, said, open it again, and we get 100% of all of your concentrate that you produce for the next 2 years for our needs. And then you look at what's happening on COMEX. And this is something that must be understood, because to me, Sarah, there is very little else that people who own silver need to understand about what's happening with silver than to look at the deliveries, okay? This is the most important thing to understand as far as I am concerned, period. And so if we talk, let's go back a month and talk about December. The December delivery notices were at 12,575 contracts. It's the largest all-time high record for a month of December on COMEX. 12,575 times 5,000 ounces per contract is 62,875,000 ounces were delivered in December. Now, when it gets delivered, that means someone said, I don't want a paper promise, I want the real metal. Now, that doesn't all leave COMEX. A lot of it goes into the COMEX in what is called eligible. Registered are the bars that you can stand for delivery on inside the system backing the contracts. Eligible means, you know what, it's here, it's ours, it's in the vault, we're not moving it, it's not for sale, thank you very much. But the question is, who the hell is standing for possession for 63 million ounces of silver? A 500 ounce box of Silver Eagles weighs 42 pounds. What do you think 63 million ounces weighs? And who's doing it? And where is the journalistic integrity across the entire mainstream asking this question, because it's happened for 13 straight months now? Since Trump won the election, every single month, it's record after record after record after record. Billions and billions and billions and billions of dollars worth of gold and silver every single month. Well, let's look at what's happened in the first 6 days of January, in the first 6 days of January, the first 6 delivery days of the January contract, there have already been 5,451 gold contracts that have stood for delivery at 100 ounces apiece, plus 6,321 silver contracts that stood for delivery. That is 545,100 ounces of gold and another 31,605,000 ounces of silver. Who's doing this? That's billions and billions here, 6 days into the month with another 24 yet to go.
It's
and there's no one
isn't it?
asking.
No,
Yes,
well, they
it
should
is.
be asking. You know what? The BRICS nations, which control over 50% of all the silver or of the gold reserves, are standing for delivery. That's the headline I've been looking at and information. What are they doing? Because it seems like there's almost full-blown economic warfare. Before we get into that, though, I want to ask you, do you think that China's licensing and what they're doing, shutting down these mines, is that essentially their response to Trump's tariffs? And is this the low-level economic war that we're seeing? It's not even low level. It's in our face.
Yeah, and so people, the lag time that this has taken, I've been talking about since 2020, and a lot of people dismiss it because it takes so long. Well, if that were true, Andy, why don't they just buy everything? Because if they came in with $1 trillion to buy everything, just like that, they'd cut off their nose to spite their face, would blow everything up. Everyone would become protectionist. No one, what do they want this for? The price would spike. No one would sell. Instead, they've been very slowly, quietly, not only buying it from every exchange across the globe that doesn't reflect the price mechanism in New York, but probably even shorting it in New York to drive down the paper price, buying it at subsidized prices around the globe, and then putting it lately at least a $5 higher price in Beijing, incentivizing all of the traders in the West to buy paper in the West and deliver physical in China and capture that spread, that arbitrage, and that metal never comes
That's undermining
back.
us, right? I mean, because they're convincing us to buy paper while they're getting the physical. That is a big mistake.
Of course, and when you ask yourself, who is standing for delivery to this kind of volume? It's central banks, it's sovereign wealth funds, it's commercial banks, it's Tesla, it's Samsung, it's Sony. It's the biggest companies in the world and the biggest banks and the biggest central banks. These people forget about the wealth. How about the information? They're closest to the information. They do not spend billions upon billions upon billions upon billions right in your face with no media attention, which really makes it interesting, for the hell of it. They know the playbook. And when you're at that level of wealth, you're at that level of information and knowledge, which is worth more than the money backing it. And these metals are being proven to be worth more than the dollars paying for it. And when you see all of these banks that are, in essence, internalizing physical silver exposure by owning it rather than leaving it floating in the exchange ecosystem, it should really wake people up. And that is one of the old sayings about gold and silver that Doug Casey made famous, and that is gold and silver are 5,000, 6,000-year-old assets that are simultaneously no one else's liability. There's no counterparty risk. And that's a big deal when you look at the behavior of the biggest money in the world, suggesting that they're prioritizing physical possession and removal of counterparty risk over anything else.
Okay, well, people will be pissed when they wake up and they realize that they haven't been given the information and there's only a small subset of people that are benefiting. Because if you look at history, and I'm going to talk about World War II, when what happened in World War II is this very small top percentage of people knew what was going on. They invested in the right things. Then the economy collapsed, and then they came back and bought everything out. That's what caused all the hatred of this top elite group of people that they persecuted so much. I don't need to name who they are, but that's what happened. And it turned into a lot of persecution. It turned into really bad, ugly things. Are we going to see a repeat of some of that simply because the average person has been kept in the dark?
Yeah, you may, and we see already a very much a K-shaped economy like this, where the rich are getting richer and the poor are getting poorer. And the reason that happens is that the rich buy assets, and their assets keep appreciating as the dollar that we think is a stable currency is disintegrating like a melting ice cube. And so for the people who don't have assets, lower class in terms of income folks, they're having a harder time making ends meet. And it's confusing because we're told that inflation is only 3%, but the CPI should be called CPLI. And the Bureau of Labor Statistics, we should take the L out of it and call it BS. The CPLI as given to us by the BS. And the thing of it is that inflation is probably 11 or 12%, according to John Williams of Shadow Stats, who just measures it the way it used to be measured prior to the changing of the metrics that the government uses to now support a inflationary agenda. And so when you talk about what's happening, the folks who have been able to buy assets, their assets have gone way up. And you can look at it, for example, and I've done this so many times from memory. If you go back 20 years ago to 2005, the average price of a house was about $240,000, $230,000, and gold was about $450. You divide it into it, you get just over 520 or 30 ounces of gold. Would have bought you a house in 2005, and maybe you say, you know what, let's keep the gold. Even though it doesn't pay any interest, let's just take out a mortgage, let's buy the house. Great, let's fast forward. Today, the average price of a house is about $450,000. So your house doubled in dollar terms, but gold is at $4,500 or nearly. So you multiply the 4,500 times the 500 plus ounces, you're at $2.5 million. It buys you 5 houses. So the point of it is your house has doubled in dollar terms, but it has lost 5 times its value in the face of a real measuring stick, that is gold. It is the barometer by which we should measure. We are told the dollar is down 10% this year against the Dixie, the dollar index. But that's a flawed measuring stick. There's something called Triffin's dilemma that speaks to the world reserve currency that says, as the reserve currency, you'll always run trade imbalances because every country needs dollars to transact global business, from buying oil to anything. As the global reserve, everyone uses dollars. So over time, they have to sell their currency in the open market to buy ours because we don't give them enough dollars to do what they need to do just through our trade. So what you are doing is weakening their currency and strengthening ours. So we're measuring it against a basket of currencies that is continually devaluing against ours. It's a flawed measuring stick. Measure it against gold, and any asset you own is falling in price in gold terms. It's going up in price in dollar terms. This is what I mean about assets make you rich or feed you, and liabilities eat you or make you poor. Liability being the US dollar. It's literally performing like a melting ice cube, where gold and silver, those assets that pay no interest, are wickedly outperforming because of the monetary and fiscal irresponsibility of our leaders who are pushing gold. So yes, you will find, I believe, very wealthy people and a lot of people who have a hard time making ends meet. Let me just continue one further thought on that. Ray Dalio just came out with a speech where he said 60% of this country has a reading literacy rate at or below the 6th grade. So we're uneducated, we're broke, we have a $38 trillion debt and $200 trillion in unfunded off-balance sheet liabilities, Medicare, Medicaid, Social Security, government, military pensions. And here comes AI just at the time to kneecap 50% of entry-level jobs and robotics that God only knows what will do to the labor market. So you have very wealthy and very poor. It almost must move us towards, as we've talked about before, which you hate, universal basic income, because people are going to have a very difficult time, uneducated, and we don't make anything anymore. We don't have manufacturing, and the dollar is being inflated away literally as we speak. In the 6 weeks we were shut down during the last shutdown because of the debt ceiling, we added $600 billion to the debt in 6 weeks.
Right.